Hey everybody, my friend Alex in Dubai likes it when I change up the background. So you got a nighttime shot of Christmas Manhattan with a bonus Brooklyn Bridge over there. All right, so it was an interesting week in oil to say the least because of the OPEC meeting, which was kind of a debacle. But I got a lot of interest when I was on CNBC Fast Money on Thursday night, and was saying that it's not by any means unprecedented. In fact, we've happened twice in the last 10 years. We get ourselves in a situation where Saudi decides to flush the market or flood the market with oil, essentially to bring everyone back into line with what Saudi wants. Because clearly, based on this latest OPEC meeting, Saudi's not really getting what it wants. Now, of course, going in, they said they'd extend cuts in 2024 Q1. We came out of the meeting after a lot of umming and ahhing and talk of Angola, of all things. And pretty much that's what we got at the end of the meeting. So the good news is Saudi continues to balance the market. And winter is a toss up. It's cold in Europe. It's pretty much warm here in Brooklyn right now. So there we go. Saudi's balancing the market, but no one else is helping them out. There's a couple of things to worry about. One of the most obvious would be if demand further weakens and if US continues growing production, the market's going to get even weaker. And at that point, what does Saudi do next? And our view is at that point, they're going to definitely threaten to flood the market, which would be probably Q1, Q2 next year. The theory is that they've done it twice before in the last decade. In 2014, we had the return of Iran post sanctions, and Saudi essentially asked at the Thanksgiving 2014 meeting for everyone to cut with them. It's actually the last page of the Naimi autobiography. He tells the story of how basically no one would cut with them the way they expected them to, and so Saudi essentially opened the taps, went from 9.5 million to 10.6 million barrels a day, and ultimately oil bottomed at $27 a barrel in 2016. The two things being Iran coming back in and US production growth into a weakening demand environment. 2020, it was even more extreme because they got so upset with everybody else that they actually hit their all-time record production level. They ramped production to an all-time record of 11.8 million. I think it was 11.8. It was over 11 million um, in April of 2020, which if you think about it, is insane. And so effectively what happened is the oil price went negative. That time it was just recalcitrant members not supporting Saudi and cutting because they can't stand cutting alone. And the scale of the cuts required just weren't recognized by the other members, and that was infuriating them. Anyway, today what you've got obviously is Iran has taken a lot of market share from Saudi and is now the number one supplier of oil to China. That's going to drive them nuts. The US is just continuing to stagger us with the level of production growth it's achieving. And of course, you've got demand weakening. And so the interest has been around this idea that Saudi will have to flush the market and how that would be done. And of course, the answer is pretty tricky because essentially you've got to shut down marginal supply. You can't control demand other than by lowering the price by increasing demand. But in order to shut down supply, you have to lower the price to the point of the marginal producer, and that's essentially a short-term Permian player. And that number is a tricky one because many of the biggest Permian players have very strong balance sheet mega companies like Exxon, Chevron, and Conoco nowadays, and so they don't shut down in a hurry. They have strong balance sheets. So the issue is you'd have to probably go down to $50 a barrel oil to really start reducing US oil supply growth. Now, of course, the rig count is down a lot, but we do notice that the frac count, which is the number of frac spreads that are actually bringing oil from drilled well to fracking into production, essentially that number's flat and US production keeps rising. So you've clearly got rising productivity, with essentially a flat frac fleet. So it doesn't look like we're going to roll over anytime soon in US oil production. If winter doesn't show up, and again, it's too early to tell, obviously, we could see Saudi with that major problem and that major choice of having to flush the market as soon as Q2 next year. All right, have a great week.